Hello and welcome to another episode of the Bitcoin News Show right here on the World Crypto Network. Thanks again, guys, so much for joining us. We have a great show for you guys today. It's been another hectic week in Bitcoin and cryptocurrencies. Lots of news, lots of topics to talk about. So thanks so much for joining us on this wonderful, beautiful Sunday as we have our ritual of talking Bitcoin. We have an amazing panel to talk to you guys with today. But before we get to those guys, let's go ahead and get into your quick bit section. So the first story real quick is Mr. Joshua Unseth. You guys may remember this guy from the other half of the Bitcoin Uncensored podcast with Krista Rose. He actually had a $7,000 siphoned from his banking account via ACH, and he made, he told us all about it on Twitter. Of course, this is where we found it, and I just thought it was an interesting story because this is kind of how the traditional banking system works. Anytime you put money into a bank, it's no longer your money. So he's still, I think, trying to battle that and get that back. So remember, guys, keep your money in Bitcoin, value your wealth in Bitcoin. Next story, we got a really interesting story because this is really cool. Jameson Lopp posted this the other day. He tweeted this, and it's an animation of the Bitcoin block propagation time. So basically, the Bitcoin block propagation is continuing to improve year over year over year. And Jameson Lopp, formerly of BitGo, posted a very revealing video illustrating just how fast blocks actually propagate today versus 2015. It's just amazing, you guys, to see this. You really got to check this out. Blocks just all over, just instantly show up all over the globe compared to 2015. And remember, we have a lot more activity on the Bitcoin network now. And in addition to that, sync times are incredibly fast as well now. I mean, just a couple hours or less. It's amazing. The core developers continue to improve and optimize Bitcoin, and it's getting better and better every year and more optimized, despite all of the continuous activity and more liquidity now into the system. So check that out. Really cool. I thought this was interesting. PayPal actually put out an official comment about Bitcoin saying that, you know what, we're going to definitely support it if it ever becomes a better currency. And it's like, wow, it's like PayPal actually thinks they have a choice, guys, about supporting Bitcoin. They think maybe we'll not PayPal. If you don't support this, you will not have a business in a couple of years. So check that out. That story is interesting. And then the world, guys, this is pretty interesting. The world celebrates the 8th anniversary of the first Bitcoin transaction with the Bitcoin pizza. So really, really cool. 10,000 Bitcoins for a couple of pizzas. Everybody, I mean, it was all across my timeline. Everybody was eating pizza. I mean, what was really messed up is that I ate pizza the day before trying to celebrate it. So now I'm watching all these people eating pizza and I got no pizza. So I hope everybody else really enjoyed that. It looked quite delicious. And then the mining space, guys, is heating up like crazy for Bitcoin. Specifically, the tech giant GMO is going to roll out the world's first 7-nanometer miner, as well as the Bitcoin miner Canaan officially files for their Hong Kong IPO. So, and then of course Samsung, is getting into the game as well. So, in just a year's time, guys, the mining landscape is going to completely change. It's going to be hugely more, decentralized. A lot more players, a lot more spread out. It's going to be pretty amazing, guys. So keep your eyes on that. And then finally, the SegWit, guys. SegWit is now comprising almost half of all Bitcoin transactions on the entire network. 40%. Recently Roger Ver did an interview with Ivan on Tech there, and it was interesting. He's like, SegWit, it's like it's only 40%. It's been like almost 6 months, only 40%. And it's like, what are you talking about? That's half the network. So SegWit is now almost comprising half the network. So really interesting. Check that out, guys. SegWit continues to be rolled out. Lightning continues to get more and more development on it. And of course, we'll be talking Lightning today. But just one last bit before we go into the introductions, guys. I just wanted to say that I will be speaking in LA next Friday at the Century City Los Angeles Bitcoin Meetup. I will be doing my presentation talking about who controls Bitcoin. So hope you guys are out there to say hi, shake my hand. I'd love to say hi to you guys. Love to say hello to all my fans and to talk Bitcoin. That's my favorite thing to do. So come out, guys. We're gonna have some drinks. We're gonna have some food, and I think it's gonna be a really great time. So if you are in the LA area next Friday, definitely check us out. The link, of course, is below. The links to all of these stories and more is below in the show notes. So without further ado, let's get to the introductions to my amazing panel today. Ladies and gentlemen, let's first introduce Mr. Joshua. He is from Vaultoro. He is our special guest today. We're going to be talking to him about Vaultoro and their Lightning integration. Joshua, how you doing?
Hey, great to be on the show, Vortex. Great to be on the show. Long-time listener. lover of the entire world crypto network, of course. And you know what? Who I think is in charge of the Bitcoin network is Mad Bitcoins. I think behind the scenes, he pulls all the strings. Yeah.
Absolutely, absolutely awesome, man. Well, thanks so much for having you on, for being on the show. We really appreciate it. We know your time is busy, so thanks, man, for coming on. Let's go ahead and introduce Mr. Patrick Miller. Patrick's actually, this is the first time that he's been on the show, but he's a longtime Bitcoiner, and we actually go way back, commenting on CoinDesk way back in 2014 and 2015. So really glad to finally have him on the show. Patrick, how you doing?
I'm doing great. Thank you for having me.
Awesome, man. Really glad to have you. We go back a couple years, so it's really great to finally, actually have you on the show. We had a lot of good discussion back in the day, and I continue, of course, now to see your tweets, and I follow you on Twitter. So I'll keep that work up, man. It's going great. We really appreciate your information on Twitter. So thanks so much for that. And then finally, Mr. Thomas Hunt himself, Mad Bitcoins of the World Crypto Network. Thomas, how you doing today, man?
I've heard that Mad Bitcoins guy is Satoshi. I haven't heard he signed some transactions. There's more proof for him to be Satoshi than there is for Craig Wright to be Satoshi.
Yeah, I think that sounds right to me. That sounds about correct. Mr. Fake Toshi. Yeah, that was pretty great. If you guys missed that as well, Mr. Fake Toshi got actually kicked out of a Bitcoin conference over there in China talking about Bitcoin mining. It was really great. I'll have to post that link too. That's not in the show notes. I'll post that in there.
And they say mysteriously that the next day, Bitcoin Gold, the adopted coin of the guy that kicked him out, the miner guy, got hacked. Craig Wright, Bitcoin Gold hack. Yeah, 51%. Someone with a lot of supercomputers and an Australian accent never could have done that. Never. Certainly not.
And it's totally not, of course, because their hashing network is like absolutely puny, giving them no security at all. But yeah, freaking Fake Toshi, it would be no problem. All right, so all right, guys, let's move on here. Let's talk about our first subject, Mr. Joshua. I would like to get your thoughts and opinions here. So you guys over there at Voltoro, maybe you could just give us a little bit of introduction first about what you guys are doing over there, and then we'll get into a little more of your Lightning integration. So first, Joshua, take it away. Tell us a little bit about yourself and Voltoro.
Yeah, sure. So I got into Bitcoin fairly early on, back in the very early days, and then integrated into actually the first swap site where in the world that I created, where people swap things. So I always had this passion about alternative economies and getting away from fiat. And then classic, it's going to change the world. Satoshi has actually cracked it. She's cracked the nut of the double spend problem, and ever since then, been falling down that rabbit hole. In Mt. Gox happened, and I got a lot of that whole hack or that whole disaster. The first thing, because there was a big online. Am I breaking up a lot?
You're breaking up a little bit. Maybe after this introduction, we can have you quickly try to switch to the LAN. But go ahead and see if you can finish your introduction.
Yeah. So anyway, we tried to build a decentralized exchange, and of course there wasn't, the op return codes weren't ready yet. They weren't good enough yet. So we focused on a centralized exchange that could have a counter asset in an allocated asset like gold, and focus on full transparency using the blockchain as transparency protocol. So we invented the glass books protocol, so everyone could always check that we're at full reserve, and have the counter asset in something that's owned by them. So if something happened to us in an exchange, the gold is sitting in the vault under their name as their property. Even liquidators can't come and touch their physical asset, and then they can trade it back to Bitcoin whenever they wanted to. And really wanted a way to have developing countries also that couldn't use BitPay or these sort of services to hedge the volatility, to be able to jump into something like gold, because you don't need as many KYC obligations with a physical asset. When you go and buy a television, you don't need to pull down your pants and show everything So it's it was kind of trying to marry the old commodity world with the new commodity world. Matters and Remus, and now we've been going for 3.5 years. We've traded, and it's really exciting to see this into this crypto space, and commodity traders and gold bugs also getting more interested in and understanding what rare numbers actually are.
Awesome, very interesting. So it does sound like you guys are, trying to bridge the gap right between the old world and the new with Bitcoin. So is Bitcoin the only way to purchase gold on your platform?
Yeah, we've been Bitcoin gold only for 3.5 years. We focused solely on Bitcoin, and we didn't want fiat involved. We didn't want any banks involved. So we're truly bank independent way of trading commodities. And as time goes forward, we are looking at some alternative cryptocurrencies that are interesting. But I really find that Bitcoin should be focused on, and I find that a lot of altcoins are a distraction. I do like things like Dash that have a really interesting governance model where you can, they actually every 10 minutes doesn't only pay miners but also pay into a fund. But it comes back to a lot of concepts that the cypherpunks were talking about in decentralized governance. I really like some of those, sort of thinking about that as well. But we'll see how that goes. But I really think Bitcoin, especially with the Lightning Network, really can handle everything every other alt does. We just need to do it and focus on it. And I don't think, I'm Bitcoin maximalist, and I don't think it should be like that, really, because people should be able to compete. I don't even mind Bitcoin Cash. I don't like the fact that they're trying to trick people into pretending that it's the real Bitcoin or the longest chain. But I like the fact that people can compete. Hey, I should be able to come up with a currency. If everyone likes this currency and uses it, then that's the main thing. That's the goal. But I think technologically speaking, Bitcoin really has the best developers, has the best core team working on it, and also with the Lightning Network and what we've experienced just lately, incorporating it, it's really going to change the world.
Awesome, awesome. Well, Joshua, let's go ahead and try to get you on the land connection while we ask the other panelists here their opinions. So let me ask you, Patrick, what are your thoughts so far on Vaultoro and this idea of trying to marry the old world and the new world?
It's a great question. I think it's awesome what they're doing. I wasn't aware that they were fully crypto to gold. There was no fiat at all involved, so that's really neat. It's interesting because we started talking way back in the day on CoinDesk, arguing about Ripple and stuff. And actually, that's why I originally was looking at Ripple, was for gold-backed tokens and assets, and seeing that there was like these people started doing this. They were having a Ripple Singapore or whatever was issuing those gold tokens. And I knew about Voltoro at the time because you guys really started this way back. But for some reason, once I kind of lost interest in precious metals, but I'm starting to have a little renewed faith in precious metals, and it's actually nice to see that this service is available to Bitcoin users. Sounds really valuable.
Yeah, very cool, very cool. Let's go with Thomas real quick. See what your thoughts are so far on this type of idea of kind of trying to maybe marry the old world with the new world, and them maybe being crypto only. What do you think, Thomas?
Well, it's certainly hard to suggest that anyone buy precious metals. I remember I bought some silver once at $40 worth or something, and it's just gone down and down. I think it's worth $10 worth or $10 worth. And again, I didn't know anything about silver, and everyone's like, it's a good store of value and all these things. So I was like, no, $40. So I think about that, but I also think that everyone does need to hedge. And if you have a lot of Bitcoin or you have a lot of Litecoin or Ripple or whatever it is, you might want to put some of it into old-fashioned gold. And I think Vaultoro would be a great way to do that. And you should also maybe put some of it into old-fashioned stock investments, get some Amazon, whatever it is. You should spread it around. I think we get too crypto-focused and people are like 100% into crypto, which is great. But you could also be 90% into crypto and 5% into gold and 5% in stocks. So I think it's good to have that option.
Very cool, very cool. So let me ask you, Joshua, are you on the LAN network now?
Yeah, we're on the LAN. We're landing it up.
Awesome. So I got a couple of questions for you. So first of all, sure. You did mention, before I mentioned that, let me ask you this one, because a lot of people say that gold, especially like Tone Vays is out there. He likes to say a lot of times that gold kind of became worthless when metal detectors were invented, and because it basically lost its portability, and now of course we have most of it just on top of paper that's being manipulated and stuff. So what are your thoughts on gold kind of maybe being being its way out, and then how are you guys like securing the gold over there as far as its connection to Bitcoin?
Sure. Yeah. I mean, everyone has their opinion on gold, but where I sit is the fact that it's not going away. You know, we have millions of people in India, millions of people in China. And if you look at the you know, the death reports on Bitcoin, we have this obituary of I don't know how long it is now, and I'll tell you what, the obituary on gold is a hell of a lot longer, and it's just constantly, oh, gold's dead, gold's dead. It survived through every single war, every single nightmare that the human condition has thrown at gold. It's come out through the other end holding value, and nothing else on earth really has in that sense. Property kaput. You know, but having gold and holding that, diamonds seem to be this weird marketing thing by the De Beers. Gold is decentralized in terms of its issuance and finding it. But I think, you know, yeah, in the future, I'm not sure what will happen. You know, we could find a way to make gold out of nowhere, or I don't know, with combining atoms or something. Who knows? But right now, the network effect is really, really great. And the thing is that when you use a normal exchange, when you use a normal fiat exchange, you have two counterparty risks. You have the actual exchange, and you're trusting a startup. 8 out of 10 startups kind of fail, you know. So you're trusting a startup with that money, and if the startup fails, liquidators are going to come in like the Mt. Gox, and I don't know if I'm going to see that money. It's already been, you know, years and years. And then the second counterparty risk is the bank that the exchange is using. Either the bank freezes the accounts or freezes the funds, which they love to do. That's a big fun game that they like to do. And then the exchange is in a Ponzi scheme, a natural Ponzi scheme, where they're trying to hide the fact that their accounts have been frozen, or the banks go bust like Lehman Brothers over a weekend, just dying. The largest bank in the world, folks. You know, these things happen all the time. So by these things happening, you have these two counterparties. With gold, it's a solid block of metal sitting in a vault. And so what we do, we use Pro Aurum, which is one of the largest vaulting facilities in Europe. They've been around for many, many years. They get audited by one of the largest auditing firms in the world, BDO International, and the gold is fully insured. So if you know, the Ocean's 12, 11 team managed to get in there and get the stuff, and get enough trucks to actually pick so much weight up, then the insurance will cover it. But you know, it's really important that we, in the crypto space, I find, look at things like this, like Tether, for instance, who really haven't no way of auditing that system. They don't audit it themselves, and so I find it really annoying when companies come into the space, are very successful, but don't do anything to really be transparent. And what then happens is they go bust, or something breaks, or something horrific happens. Then the state comes in with their superhero costumes on, going, we've got to regulate the hell out of this market, you know, because look what just happened. You know, folks, really, you need to use your common sense. Don't trust exchanges that aren't transparent. Don't trust things like, you know, I don't want to say Tether's a scam, but at least show me the audit, you know, and that's really, that's really important.
Well, and Josh is right. We used to have the ideas back in the day that an exchange like Kraken would be cryptographically verifiable, and we would be able to see all their money in their accounts, and we'd be like, oh, they're a good exchange. They have this much on hold here, and they would actually publish this data. It was the dream that we had, but I don't think it ever happened. And I wonder if it would, except for something like BISC, like a decentralized exchange where you can actually see there's 100 million in this order book, there's 10 million in this order book, and it's all verifiable somehow.
Well, yeah, that's what I was going to ask you next. Actually, I was going to get to that specifically next, Josh. I was going to ask you because you mentioned earlier that you said that decentralized exchanges, like the technology wasn't there. And granted, you know, it isn't as far as you know, being able to be readily available. You literally, BISC literally had to build everything from scratch, right? So is that what you mean? Or because I don't know if you said it wasn't technically possible, or if you guys just didn't want to do that.
No, I was talking back in 2011 days. So, you know, that's when I was already looking at decentralized exchanges. Then when Mt. Gox collapsed, which was 2014, I went back and looked at it again. But really the op return codes, the scripting language of Bitcoin wasn't ready for some of the things you needed, time lock verify and things like that.
Is it? Do you think it's ready now? Does it have the
Yeah,
stuff you guys?
it is.
Okay,
Definitely.
So
Yeah.
are you guys gonna Are you guys on the path to become a more decentralized exchange and organization, or?
So the thing is that gold is, precious metals or solid things or physical assets are centralized. They have to sit there. They're centralized because they need to be audited. They need to be insured. But what we can do is focus on transparency, focus on the fact that we need to make because centralized things aren't going away. We do need them. They're a very efficient way of doing certain things. Yeah, we need to decentralize as many things as possible. But there's certain things that need centralization. They just work better like that. And but I think transparency is where we can use. I mean, the blockchain, for instance, we invented this glass books protocol where we give every single user an anonymous ID, and they can then log out of the system, check, and then we publish every anonymous ID. So we don't know that they're checking because they can log out and see this. And they check and see their anonymous ID, see how much gold they've got, see how much Bitcoin. They can then check that against all the cold wallets that we publish and the warm wallets and hot wallets. So it's and then you can check that against the BDO international auditing certificates on the gold side, the statements from the vaulting provider, and the insurance paperwork. Yeah, it's not, and we're always pushing to get that further and further. Like we're working on some hardware devices now to stick under the gold pallets that if the vaulting facility opens their doors, then that'll register a change, whether it's air pressure, temperature, or something like that, or weight changes, and just register something on the blockchain. There's already a lot of protocols with the legacy gold industry. So, for instance, if the vault door needs to be opened, the insurance company needs to be notified, and they give a window of time that the vault can be opened for. And so there's already a lot of protocols in place, and we can actually put those onto the blockchain. And it's not, since we're dealing with something physical, there's always that interface between between a blockchain and between the physical assets where there either needs to be trust through an Oracle system or something like that, but we can minimize that trust and we can maximize and have radical transparency compared to what we used to have.
Yep, that is really great. Because I did take a quick look at that glass protocol. What was it called one time? Glass what?
Glass books.
Yeah, the glass books. That was really interesting because I mean that really is a next level of transparency that I don't think I've ever seen before in any normal centralized company. So if everybody, man, just imagine if banks start doing that, like they would be out of business because we run a fractional reserve system in this country. So very, very, very cool. So let's get into the lightning stuff here now.
Yeah.
Let's get it. So first, maybe if you could just give us a story behind it and your thoughts on. So walk us through kind of like what was the decision-making process behind that and the research that was put into it and the final version of what you guys did with it.
We've been watching, of course, the Lightning stuff develop over the years like everyone else. We've been really angsty to biting at the chomping at the bit. Yeah, that's the expression, chomping at the bit to get our hands on it. But we, as everybody knows, especially on this network, is that we've had this stalemate between big blockers and small blockers, and SegWit just couldn't pass for the longest time. And then there was so much heated debate and so much anger and hatred and so much turd slinging around. And we, really at the end, I was, some might know, I also signed some things like the 2x thing because we needed something to break the stalemate. I didn't even care if we wanted to maybe make the blocks slightly bigger, but we needed SegWit because the only true scaling is to have a Lightning network, a layer 2 solution. You can't just keep going block size bigger. Yeah, if we needed a little bit bigger blocks, whatever, let's just do it and get Lightning, because there was just so much in and air. Anyway, it turned out that then Bitcoin Cash came along and split off, and I was like, hurrah, great, they've got their own blockchain, we can go for it, fantastic, let's get on with it, build the layer 2, and hey, I don't know, maybe bigger blocks are a better way to go, we'll see. What I really didn't like, though, is that they're going around pretending and tricking people, newbies especially, into thinking that it's Bitcoin and using Bitcoin.com and stuff like that to do this sort of stuff. I think it's really bad sportsmanship and a terrible way of going. But competition, great. Hey, try bigger blocks. It's, Let's see.
If it only wasn't for all of their actions, their project would be fine. Right? All their actions, like associating with Craig Wright, having Roger go on all these news shows. Like he went on the Alex Jones show, and Alex very clearly wanted to talk about Bitcoin. And I'm a reasonable person. You come to me and say, hey, talk to me about Litecoin. I will talk to you about Litecoin. Yeah. Roger goes in there. Alex says, what about Bitcoin? And Roger's like, well, Bitcoin Cash is a great system that lets you do this. And it's like, you're just lying. You're just being disingenuous. And every time they do that, the whole project loses its sense. I mean, it has no technical reason.
Well, also, too, let me say that, you know, the 2x thing was really unfortunate because people like yourself, Joshua, I think were really misled to the point to where, look, they said that, look, this 2x, this is great. It's got everything. We got SegWit and bigger blocks. You totally want this. But you guys were misled to the fact that you didn't understand that the actual repo, the GitHub repo itself, was trying to be usurped, was trying to be replaced. And see, and a lot of 2x people were misled like that because of the way that it was marketed was great. Everybody is happy, everybody wins. But in reality, of course, the only thing we actually wanted was SegWit. We did not want the freaking repo usurped and replaced by a single developer, Jeff Garzik, right?
No,
and so, just so you know, because we were really trying to, at the network over here at WCN, you know, we were really trying to hammer that home and let people know that, look, this actually is, you know, a red herring. This is not what they say it is. This is not an upgrade, right? It was literally trying to replace the repo. So that eventually came to light, and we understood. But yeah, it's just unfortunate to see, you know, people like yourself and stuff that were kind of maybe misled or lied to even to sign that.
Furthermore, the block size is increased. It's where we're seeing blocks that are bigger 1 megabyte. We're getting more transactions per block. And we did that without having to hard fork the network.
Yeah, and I do understand some people call it crazy, but actually, if you really think about it, the smaller a block is, the more decentralized it really is. But at the same time, there's a lot of play. And we won't go into it because it's all being talked about over and over again. But so what happened then was we watched this Lightning Network slowly play out on the testnet, and people started writing, like Jack with the Zap wallet. It's fantastic work, and things started popping up, and I was thinking, man, we really need an exchange to jump on board, and we've got an exchange. Let's do something. Let's be reckless, and so I mean, when we say reckless, we really are just super beta. So people can sign up. They turn on the little switch in the settings to say beta setting, and they can only send 100 satoshis at a time through this network to us. You know, in theory they could send a lot more, but we've capped it at 100 satoshi just because we don't want anyone to lose money. We don't want to lose money, and it's still, you know, it's still very, very beta. You know, but at the same time, how cool is it that you can send 100 satoshis? You know,
you can send less than that. You can send far less than that. You can send single. You can send sub Satoshi levels. We're actually seeing sub Satoshi right now.
Yeah. That is mind blowing. And really, you know, some of this stuff is really starting to step on toes of really great technologies also, like IOTA, who are trying to do, you know, feeless and really tiny transactions. They're trying to do cool stuff with machine to machine, but Lightning Network actually does that now. So you know, we're seeing a lot of these use cases that that other cryptos have started to want to do being taken back by the Lightning Network, and we will see, because there is still a couple of things I'm still not sure about in terms of the game theory for the miners, but I just want to see it play out. I want to see it play out, and like I said in the beginning, you know, competition is really what is sacred here.
Absolutely, and that's that. Oh, sorry.
Oh, there's huge privacy benefits too. I mean, I don't have to broadcast transactions on the main chain. That's a huge benefit.
Huge. Yeah, absolutely huge. Yeah.
It's huge and encrypted by default, you know, running over the Tor-like network that's the type of routing that they're using. So just maximum amount of encryption. But, you know, it's got all of these amazing benefits. But again, you know, people are of the opposition trying to, you know, bring it down and say all sorts of crazy things. But what's great is that there's so many refutal articles. There's so many videos. I mean, even Andreas has a couple of amazing videos debunking a lot of these myths about Lightning Network. You know, I had to encourage everybody to check that out. But it's just amazing because we have this network now that is continuing to grow over and over and over. Every week we get more nodes, we get more liquidity, and you know, people look at it and they're like, "Oh, it's only like 15 bitcoins. It's nothing." And it's like, "Are you kidding me? Like, this just launched a couple of months ago, wait, just give it 1 year, just 1 year. My prediction personally is that by the end of next year, literally Lightning will have completely permeated the ecosystem and be supported by every major thing, not just Lightning, but side chains, at least the liquid side chain, like will be used by every major exchange. Lightning will be at full use with every single major exchange, every single major wallet, and we will have really in only a year gained many orders of magnitude amount more of scaling. And then that is still just the beginning, because eventually we're going to continue to optimize the blocks even further, and eventually one day maybe even increase the block size a little bit more, as technology goes on. But there's just so much more optimization left to go. So that was your story with Lightning. So where are you guys at now with the implementation? How is it going? Is maybe tell us a little bit about how it's going. How many people are using it?
Oh man, it is so cool. I actually, well, for searching a better word, cream myself every time I use it. It's just fantastic. Like you literally, this is how cool it is. You don't need to wait 6 confirmations, folks.
Yeah.
Sending money and it's instantly on exchange, and we've got an instant order thing, so you don't even need to trust our hot wallet anymore. How cool is that? You can actually send some money and pick an order out of the order book straight from your controlled wallet using the Lightning Network. That's for market takers. Market makers will still need to trust the wallet that we provide. But these sort of things is what's going to really change the entire industry and require less and less trust. And that's, I'm a big fan of that. Yeah,
very cool.
Yeah, so it's all moving forward, and I'm really looking forward to some of this, to working a little bit closer with wallet creators and try to figure out how we can make this a better ecosystem.
Awesome. Let me just turn it over to the panelists to see if they have any questions or comments about this before we move on to the next topic. So first, we'll go with you, Patrick. What are your thoughts so far on this technology and their utilization of Lightning?
I think it's really, really novel, or interesting. I think right now we are seeing that there's really an endless amount of potential applications that can be built with Lightning. And this is a fantastic example of using that instant payment to, just pick an order, like you said, pick an order and pay it. That you just blew my mind, to be honest with you.
Awesome.
So yeah, that's exciting.
Awesome. All right. Let's hear Thomas's thoughts on the conversation so far. What do you think, Thomas?
It sounds great, and I think Josh covered it a little bit, but what if we use science to bring an asteroid full of gold closer to the Earth and then mine the asteroid? What about gold then? I like it.
Well, fortunately, the technology platform, you can shift to another store value asset, right?
See, there it is. You can switch to platinum.
I always
find a platinum asteroid.
Yeah, this is the same questions I have about gold too. Is where does the supply come from, and how who's manipulating the price, and those are the types of things that are hard to analyze with precious metals. There's so much geopolitics, but the fact that central banks are hoarding it is definitely a bullish signal, I would say.
Yeah.
Well, and what's great about Voltoro is, like Josh is saying, they do have the 1-to-1 where your gold is on a pallet somewhere. It is here. It's not like those gold tickets where it's always like, we have 500 bars of gold and we printed 1,000 tickets and we're just going to see how it goes. That's part of the problem with the trust in the system, is it didn't link up properly before.
Yeah, and in fact, that's why we didn't tokenize the gold. Many people think we've tokenized the gold, but there is major problems with tokenizing gold and using blockchain to, do this new fantastic thing with gold. But actually, it opens up a world of pain. The problem is that you have demurrage. So the cost of holding gold, you have the large vault doors, people with guns, insurance, auditing, all these things cost money. So what happens when you do a one token for 1 gram of gold, and every month that token loses value, and because you're paying for that fee to store the gold. The second thing is, it's illegal, folks, to mint your own currency in most countries. That's why Satoshi created Bitcoin, because it couldn't be shut down. And the third point is that allocated versus unallocated is a very, very key point. Allocated gold means it's your property and your legal name is your thing, and it's off of our books. It's off of Voltoro's books. So if we tokenize the gold, we would have to hold on our books. We'd have to tokenize it. It would have to fly around. Now, if two drug dealers did a drug deal and used that token and the police got into it and said, what is that? What did they use as money? And where is that? Oh, the value is sitting there. And they could theoretically come and shut down the entire operation, and then the whole economy collapses. With what we're doing is allocated gold, they can't do that. It's a very long history of law, very strong laws about allocated resources. And it means that all they could do is say, hey, that person did something, and maybe, you know, get a subpoena for that account and shut down that one single account. But you cannot take down everything. And this is what the problem that eGold had in the 90s as well.
Exactly.
Is that they tried
That's what I was going to say, Josh. I was going to agree that eGold had the same problem. And when Bitcoin came around, we'd already seen these centralized things go up and go down. So everyone was very skeptical. They were uncertain about this new Bitcoin thing. Would it crash? Would it get seized like the others? And so far, so good, right?
So far, so good. And really, the biggest problem with eGold was they tokenized it within their own database. They let people send these tokens to other people, but it was not allocated to them. It was allocated to the company. And that means the whole company could be legally just shut down by a single swipe of the pen. And that's just very, very unfortunate.
They didn't even have a blockchain. They just had a database. Anybody could have edited that. Oh,
well, that's true.
Well, let me ask you, Josh. So since you kind of, you know, deal with gold a lot, and you deal with a lot of companies and people who deal with gold, what are your outlooks on Bitcoin? You know, getting a chunk of that, getting a percentage of that. For example, how long do you foresee until governments start holding gold, or until Bitcoin can maybe even take 5% of gold?
Yeah, I mean, I think it's. I think they have different use cases. To be honest, I think they're slightly different hedges. I think Bitcoin is still far too volatile at the moment. I think it could take years to see that volatility until the volume becomes so large. I think once Bitcoin hits a price of $1 million or something like that, we'll see a little bit more stability, because it'll take a lot more to move the market too much. And I think that's why we have fairly stable gold, is because gold is the second most liquid market in the world under the FX market. It is traded like crazy, yet it's fairly stable. You know, I mean, yeah, sure, it moves up and down, and people say, oh, it's very unstable. If you compare it to other commodities like corn and oil, if you're like buying corn and oil with gold, you know, that pair, it's fairly stable. And so. So yeah, I think we'll see it, but we'll see. I'm not too sure. We'll have to check it out.
Yeah, because I definitely suspect governments, if they aren't already secretly holding it, like, you know, like Venezuela, because their entire embassy, like all their government buildings, are pretty much filled with miners now. Wow. I would say that it would only be a couple more years, right? Probably by 2022. I'd say that most of the first world governments would have to be holding us at least a small percentage. Would you say that's about right? Or
absolutely, and I think that could happen. That could be more of a binary thing. Once we see one country openly saying that they're starting to hoard crypto, and not just their weird made up one that they're building some shitcoin, but actually they're that they're hoarding Bitcoin because it's got the network effect of the globe, and it's truly it's truly globally accepted. I think that's when other countries go, oh, and get the FOMO that investors get.
Yep, makes sense. Okay, well, I think we can end this topic unless anybody else has any other thing to say on this one. We can go to the next one. All right, cool. Let's head into the next topic then. So this one was pretty interesting. Well, actually, before we do, we better ask everybody to please give us a thumbs up if you guys like the video. If you like what you're seeing, please give us a thumbs up. That helps us get into more and more people's feeds, and more gets us more views. So that allows us, of course, to talk to Bitcoin to more people. So, and again, if you don't like us, hit the thumbs down button. And if you guys are new to this channel, please hit the subscribe button below. We do these shows all the time. Thomas has shows almost every day. And of course, we do this show here every Sunday. And so we always got something brewing over there on the World Crypto Network, and we got lots more shows to come. So thanks guys so much for joining us. I think we can move on here to the next topic. So let's go ahead and talk about this. TechCrunch has reported that the venture capital investments made in the space have already surpassed the levels seen in the entirety of 2017, clocking in at a casual $1.3 billion, not even 5 months into this year. I'm going to ask the panelists here. Let's go with you first, Joshua. Is 2018 kind of looking more and more like the year of venture capital for crypto? Because, you know, last year we had the ICO. That was the year of the ICO. But what do you think about this year? Is more VCs coming into crypto? Is this the year of the VCs for crypto?
Yeah, and it's funny, when the ICOs started coming out, it was really all about ending, you know, oh, it's the end of the VC, you know, ICOs are the end of the VC, but really, no, they're not. What's happened is that the VCs come in and do all the pre-ICOs or the pre-funding. They get all the cream, they get all the good stuff at the start, and then you know, the actual ICO, that's when the people, the normal Joe blog on the street, actually buys something that's way overpriced and is going to get dumped on. You know, VCs have really, what it's looking like though is that ICOs aren't going away. The concept of tokenizing your assets or your stuff isn't going to go away. It's only going to get a little bit more complex and a little bit more regulated, because you're dealing with centralized entities that are going to ICO. And VCs will jump in more, because I think VCs actually are looking, the VCs that I've spoken to are actually are not as interested in control anymore. They're more interested in having that liquidity, being able to dump whenever they want, which is terrible for the investor, but for the normal investor. But I think that VCs are definitely coming into this market, which you know, definitely stepping more and more into the crypto. But I think yeah, we'll see what happens. And I just also like to say, you know, someone said to me yesterday, oh, but no one uses crypto. No one uses Bitcoin. And I was like, hang on, wait. Last year, more people spent money on ICOs than the entire VC space. So people are using it. They're just not using it like, you know, to buy things on Amazon yet. You know, that will happen. Yeah. That will come.
Yeah, it is mostly speculation, of course. Right now, it is early days, as I try to continue to remind people. But yeah, it's mostly speculation right now. But of course, Bitcoin seems to be the only actual currency with any real use case, because we got ATMs all over the place. You know, we got real people that really. There are people. You know, Krista Rose likes to say this all the time. There are people that their lives depend on Bitcoin out there. You know, that's where we are right now, that people really are depending on this. There's people all over the world, you know, like countries like Venezuela, but even in countries like the US, where people still, there's like a life and death situation. They need to get their hands on this, because there's so many people around this planet that are unbanked, right? And you could be unbanked in a first world country, right? There is huge amount. We've had crazy things in the United States with all these operations that are going after various industries and shutting down their credit card and shutting down their PayPal. And just like today, a tweet came across my Twitter sphere about how somebody's bank account was shut. I was a journalist, how their PayPal donation button was shut down. And literally the only way she's eating right now is from Bitcoin donations. So this is big Bitcoin. I see currently is still the only the only public decentralized blockchain at scale, but also the only blockchain that's where a large significant percentage of it is not actual speculation. What do you think about that, Joshua?
Yeah, I totally agree. And actually, we've got our CMO is from Venezuela, and I'm constantly getting reports from that area of the world. And in fact, Bitcoin is, even with this downtrend from 2018 December, it's still outperforming the Venezuelan bolivar. So you know, it's amazing to see that fiat system crumble. And I don't think people really appreciate the fact, when they're living in their comfortable areas and they've got their bank account and they've got their job, they don't really appreciate that actually a lot of people don't have banks. I read some crazy statistic about standard middle-class Americans. How many of them are unbanked is actually quite shocking. Yeah,
it's growing, by the way. It's growing, by the way, too, as they just continue to just kill people's credit cards and their bank accounts. They just shut them down with these various operations that and regulations that we keep imposing on people. So yeah, it's a sad situation, and you can get your bank account shut down actually pretty relatively easy in America. It really doesn't a whole lot to get it shut down and to get it denied, and even for the banks to even to just completely blacklist you because it's so easy for them. They just put your name on the list and you're done. It's absolutely over. So Bitcoin, we had no other opportunity.
We have many, I've come across many people that have actually withdrawn Bitcoin to a bank, and the bank have a policy. Literally, it's part of their business model. It's not just something that happens. It's part of their business model to freeze accounts, go and speculate with that for 3-4 months. Maybe it's $500,000, whatever. Go and speculate with it, do whatever they want, put on their books. but basically have the owner of the actual fund sitting there. And many people still don't realize that when you put money in a bank, it's not your money anymore. It's legally not your money anymore. It's legally the bank's money. That's why they give you interest.
Yeah, it is actually kind of crazy because I just, at the beginning, top of the show here, we had that story about Unseth and his account getting 7,000 siphoned ACH. I've known several people who's had their accounts siphoned for various reasons, and even some for tax reasons, but even some for regular reasons too. Like it's just ridiculous. And now we see things like with Unseth where they just randomly, accidentally pull things out, and so there's no security, there's no accountability, and the average American or the average client here of the bank is just kind of without any type of rights or any type of things to do. And now, without any options. And now we see Wells Fargo, like, I don't know if you guys have heard, but Wells Fargo, all the crazy things that have happened with them. They now have all these commercials out on the radio and television saying, Wells Fargo, you may have heard us in the news, but we're trying our best to like that whole spiel. It was the whole BP thing over again. Like, we're sorry. We're sorry. And it's just completely ridiculous that they think that people are going to buy this. But go ahead.
How hard is it not to make fake accounts for your users? That's all they were doing. We were making fake accounts for our users so that we could get more rewards and have more accounts. We'll try not to do that in the future. Oh, that's great. I'm glad. Wow.
It's like, thanks for not defrauding me. Thank you so much. But yeah, it is kind of crazy. Let's go with Patrick next on this topic here. What do you think, Patrick, and the discussion so far? Is VCs, are they are they still in play here? Or is it going to be ICOs forever?
Oh, that's a good question. ICOs, they never end, right? I mean, altcoins have been around for a long time. They're going to continue to be created and made. Do you want to keep your money in a centralized token that's reliant upon the goodwill and the hard work of some people you don't know out there? So you're going to buy some of these tokens, and maybe they're going to do a really good job, maybe they're not. Maybe they're just going to dump on you, and then you're going to be left holding the bag. I don't see the value proposition in that. I don't see the value proposition in theoretical business models and investing in those theoretical business models, not unless I'm getting assets in return or some equity in return, in which case, maybe that's where I see the only value in these tokens potentially is as something that's a securitized assets. But beyond that, it's totally insane to be investing in something with no, where literally the people that just created these tokens and literally printed them, can just walk away and they can jump to the next project or the next project. There's no incentive for them to stay with this particular project beyond, what community goodwill or something. It just seems crazy to me that we're.
Yeah. We've seen people like Latimer, of course, just jump from project to project to project. And some people are saying he's a crypto genius. He started all these projects. It's like, no, dude, he started a scam, which paid for his next scam, which paid for his next scam. And I think he's on number 5 or 6 or something right now. EOS is his latest thing. So it's like, absolutely ridiculous. And if you guys has seen any videos from Consensus, you can see it's just wall to wall of ridiculousness. Everybody's trying to do the same thing over and over again. There's out of all of Consensus, there's maybe a couple of interesting projects tops. And, you see walkthroughs like with Ken Bozak. He did a great multi-hour walkthrough of Consensus and interviewing all these different projects, and it's just like ridiculous, like the same thing over and over again. There was one maybe interesting thing to do with like video gaming, because I think Bitcoin and crypto can play a big role there for both having assets on digital assets in the digital world linked to blockchain, as well as cryptocurrencies to be able to spend and sell those things for. So, because we've seen this already, we had this already before crypto. We had this with like World of Warcraft gold and things like that, and we saw people making digital assets and making money with that. But now with crypto, I think it can be taken to a whole nother level that we've never seen.
And those applications don't need to pollute the main blockchain. They don't need to pollute that layer 1. You can build them on side chains. You can do trusted side chains, or you can do them on these Lightning Network. You can create these different assets now. So there's no reason to pollute the main chain with this sort of thing. I mean, we can't guarantee low fees for everyone to do whatever they want to do on the main chain. So sorry, guys. That was what you were expecting.
Well, remember, guys, despite what people like Roger Ver say over and over again, look, the fees are what make the network secure, people.
Absolutely.
The fees are what pay the miners. If we don't have fee subsidies, we don't have a network. And that is extremely important. A lot of people are celebrating the low fees right now, like literally one Satoshi per byte for free transaction. And some of them, for if you wait a week, it's like now free. It's like down to 0. But look, I'm not super as excited as everybody else is about this, because we still need some fees here to subsidize the network. And I think that's going to come. It's just that as we know, we're in a down bit of a bear market right now, so the use is not up very much, but or it's not, you know, taken off right now at the moment. But we will, when we have the next bull run, there's going to be more and more transactions, and this is going to play out like this, guys. It is going to be a hockey stick, you know, S-curve adoption. We're just one day, you know, 1 year it's going to look like it does now, and then next year it's just going to be insane, and the year after that, you know, more and more. So.
Yeah, and blockchain security is the most important thing in the system. I mean, here we want to put all this value onto the blockchain. The blockchain can move in basically. There's no limit to the amount of value that the network can move, even with the current transaction level. But we want that liquidity. You know, we want that liquidity so the network's secure. But you know, on the other hand, we need the whole network to remain decentralized. It's very important. If we're going to be banking on Bitcoin and building these applications on top of Bitcoin, we need that layer one to be extremely secure. And this is why I just think that Bitcoin has the most value long term. And you know, it's crazy to me to think that we would remove. You know, we would increase the block size to 32 megabytes. And now I mean, it's basically, in my opinion, Bcash is permanently bricked. There's no guarantee that network can ever be secure. We're now relying upon, you know, miners and some developers that are basically, we don't even know what they're doing. They're working behind closed doors, making deals behind closed doors. How are they going to run that network? How do we know that network will ever be secure? Because they tell us it's going to be secure, because we have to trust it's going to be secure, that one day they're going to implement the right monetary policy to make it secure. I just think that just fundamentally breaks the whole value proposition of Bitcoin. I don't see why anyone would want to, and you know, why central banks or anyone would want to put liquidity into something that relies upon that trust.
Yeah, it's absolutely crazy, because the BCH is not even filling up 1 megabyte blocks, and here they just hard forked to 32 megabyte, which, by the way, like a 25% of the network, 25% didn't even follow along with it. So they now have another fork. I mean, they've hard forked a few times.
The security of the network, because there's less nodes now. You know?
Yes, with every hard fork, you reduce the network security because by orders of magnitude, by some of the reasons you mentioned, Pat, where you lose node count, but then also because you create all these other coins, and then, you know, then also you lose hashing power, which of course makes you more susceptible to a 51% attack. It just goes on and on and on. And remember, they've hard forked 3 times in just a few months. And as Roger, you know, Vera continues to say, oh, it's just a upgrade. It's just a software upgrade. See, it doesn't sound so bad. Look, from technical people like myself to Patrick, you know, to everybody who's ever told you guys, JW, you know, the list goes on and on. All of us have been, in the technical community, have been trying to tell you that BCH, you know, Ethereum, it is a bad idea. These are not sustainable. And you guys will eventually find out. Now, of course, these things will pump before then, right before they'll ever crash. But you guys will find out that Ethereum is not sustainable. BCH is not sustainable. Their chains are essentially completely broken.
Building your community around the idea that fees are a terrible thing is literally antithesis of the security model of Bitcoin. I mean, you need proof of work fees to secure the network when there's no more subsidy. Like, the network is subsidized, and after the next block halving, that's going to be, you know, more of that percentage of the proof of work, you know, for the reward is going to be coming from fees. We have to grow that. I mean, we need to be forward looking and not rely upon centralized actors to make that decision for us when the time comes.
I mean, the hope is, though, if I could just interject there, to have higher volume and smaller fees, right? Because really, that's what you want. You want as high volume as possible and smaller fees. And you know, it does break a lot of great use cases. Having, you know, in December when we were looking at some of the when was it? Just before SegWit came through as well, we were having like $20, $30 fees in Bitcoin, and it was really straining our business model. A lot of people were complaining. It breaks a lot of use cases. So, you know, eventually now with Lightning Network, we're getting that back down, and we're still collecting enough fees, hopefully, to pay the miners. So it's a work in progress. It's
a very tricky balance, because, you know, when you have no fees or ultra low fees, the network can then be spammed, and you know, you can fill that mempool up. You can fill up the blocks with an endless amount of you know, spam transactions as well. And people say, oh, well, if they're paying a fee, they're not spam. Well, I mean, but if you're dropping that fee down to so low that it could never sustain the network, where you would need billions of transactions, you know, and then you need huge blocks. I mean, there are so many elements that go into this. It is.
I mean, it's funny because they like to say that, oh, if it's a fee, they paid the fee, then it's a real transaction. Look, there is such thing as malicious transactions on Bitcoin. The Bitcoin network itself was spammed for a number of months. It was spammed for a while, and we can tell that it was being spammed because it was such small dust transactions that we know that they were being used for nothing other than to clog up the mempool. You know, this is the reality. And imagine what would have happened if we would have had a bigger block size than 1 megabyte. Imagine what would have happened to the network as it was getting spammed if we would have had like a 32 megabyte block. I mean, the network would have been destroyed. So yeah, so this is something to think about for you guys. We have to let Thomas talk here. We haven't spoken to Thomas. Me and Patrick got in a little bit of a side channel there. So let's go with Thomas. Thomas, what are your thoughts so far on the discussion so far, and then of course VCs and ICOs?
Well, the first thing I'd say is that there was that great article recently about the hash rate still rising in Bitcoin. This means that miners are still investing money. They're still building new mining operations, and they haven't stopped just because the price is in a temporary downtrend or whatever. So I think that's very important to know. I also want to remind people what Josh said was very important, that the venture capitalists are not about building, right? They're about profits. So what's great about the ICO thing is not that it builds better companies or that they're more accountable or you can trade the tokens everywhere. Like Josh said, it's that you can dump faster. So now if you don't like the company, you don't need to try to control it. Like the old thing Josh was saying is you need to control the venture capitalist companies and you need to tell them what to do. And that was the point of VC. But now you just want to get in and get out. If it goes up 10x and you sell, you're a fantastic VC. You've done well. Who cares if you built anything? It doesn't matter at all. So people need to watch out for that. A lot of projects go up and down and no one knows. And then back to the question and the topic, I do think 2018 will be the biggest year ever, but I think 2019 will be bigger than that, and 2020 will be bigger than that. We're in a situation now where the cat's out of the bag. Everyone knows about Bitcoin. They're trying to fool everyone with this blockchain nonsense and this we're going to do blockchains. It's going to come back to Bitcoin. They just don't know how to make money with Bitcoin. To make money with Bitcoin without adapting the system, you actually have to do work. And no one wants to do any work. They'd rather build a centralized system on top of Bitcoin, but that's so easy and fails, obviously, and they don't want to do work. But they're going to have to do work, and the new VCs and the new companies are actually going to do this work, and they're going to build projects that we can use, things like RSK, the side chains, Lightning Network, Layer 2, Layer 3, all these other things, different layers on top of Bitcoin. And again, Ethereum could have worked this way from the beginning. Vitalik wanted something. It's just like the scaling debate. They want this 2 megabytes. They're willing to walk if they don't get it. They walked. Vitalik wanted the Bitcoin to be set a certain way. He didn't get it. They weren't sure. It wasn't secure at the time. He walked. He made his own billion-dollar project, and that's great. But at the end of the day, these slow and steady developers on the, you defame them. You call them the Bitcoin core team or whatever it is, but slow and steady, they keep this airplane flying for all these years. There's never been a Bitcoin downtime. You had to pay more, but it still worked. This means a lot. This is the network effect.
And that's why I mentioned earlier, about the top of the show about Jameson's mentioning the block propagation. Despite the amount of Bitcoin's growth, we still have faster block propagation times and faster syncing times than we did in 2015. And that is a testament to the engineering of the Bitcoin core team and the Bitcoin core process. That's just unparalleled. There is nothing else. I mean, Ethereum literally just went past a terabyte on their block size. I mean, in a year from now, Ethereum will have to be run in a freaking AWS or data center. It's because otherwise it will not be sustainable. And it is not sustainable even after that, because again, they're trying to build a world computer, push it through a little node. Push it through a freaking single node. Look, the internet doesn't go through just a single node. The internet goes through millions and millions of computers and servers across the internet. That's how it's sustainable. It's just ridiculous to think that Ethereum can actually scale and do anything. So yeah, really great points by everybody. And and real quick, just want to say the highlight Thomas's point where new all-time highs in the mining hash power is continuing every single week we seem to hit new all-time highs. So that is huge. And then finally, the decentralized guys, listen, making something decentralized is hard. I'll let you go in one sec, Joshua. But yeah, Joshua knows making stuff decentralized is hard. It's the much more harder route. Like you look at companies like BISC, or you look at projects like BISC, and you can see that they went from the beginning to make sure it uses to make sure it's decentralized and that it follows the Bitcoin ethos, because it's way more difficult to actually follow the Bitcoin ethos than it is to just spin up an AWS server. And so this is what we've seen people doing time and time again. Go ahead, Joshua.
Yeah, just wanted to add to the block propagation times across the nodes. This is one thing that I love about the Lightning Network too. It actually incentivizes full nodes again. it's a type of full node incentivization, because if you run a node properly, it'd be really good to run a full node and be a hub in this little thing. And people say that centralized because hubs is ridiculous. The cost of switching is so little. It's not like, let's say an ISP model is hardware. The ISP is very hard, very expensive to go around a bad actor. But with software, if there's one big hub that's like, chewing up everything and starts censoring transactions, it's very easy for me just to whip up a full node and start routing channels around that. But what's great is that we start running full nodes and incentivizing them through some sort of fee collection. Even though it's minuscule, we can see that even minuscule in game theory is that even minuscule rewards pushed on the through rewarding good behavior actually has exponential growth in whatever you do. So by incentivizing full node owners to sort of run Lightning Network channels, we will see a lot more nodes popping up. And this is the biggest problem with big blocks. And a lot of people kept on bringing this up. Look, what's the problem? Hard drives are cheap. It doesn't matter. I've got a terabyte on my laptop. It's cheap. It's not about the hard drive space, folks. It's about propagating blocks. If a miner propagates a block that's 500 meg, let's say, just to be crazy, then they win that block, send it off. By the time it's slowly propagating across the network, they've got a head start. This big miner has got a head start on the next block. So eventually, and everyone else is still mining the old block because they haven't received this massive chunky 500 meg block yet. And so what happens, this head start, and we're talking, even head starts of 30 seconds, 1 second is very, very advantageous in this race to get the next block. So it is more about propagation times, and that's why having smaller blocks is important. I think we'll really see now the next level of network effect with the Lightning Network. I'm super excited to see it all rolling out.
Yep, very excited. And it's just kind of funny, some of these myths about how Lightning Network is centralized or how it's going to take away fees from miners. And it's like, look, I think we made the point here that with Lightning, the network is going to grow exponentially. And that means exponentially more transactions for the miners, because Lightning Network is not off-chain, as they say, right? It still relies on-chain transactions. Every single channel is 2 transactions on the blockchain. So, it's all about having a little piece of you're having a big piece of a tiny pie, or a little piece of a massive exponentially never-ending pie. And that's kind of what we're going to see with the miners. That's kind of what the proposition is for Lightning. So very, very cool discussion, guys. We did have a couple of topics left, but we're already kind of running over time, so I think we can end it. We'll just go with one last round if anybody's got something to say. So we'll start with you, Joshua. One last comment. You got the floor.
Yeah, look, I just think it's, we're living in one of the most exciting times in history, I find. We're disrupting finance, guys. We're disrupting money. This is, people that say, big blockchains, Bitcoin's not that interesting, blockchain's super interesting. It's the most ridiculous argument I've ever heard. I've said it for ages. I'm just so overhearing it. It's like saying, train tracks, they're fantastic, but trains, I don't know, useful for trains, or saying, poker, what a great game, super interested in poker, but playing cards are kind of boring, not really any use, no future in that. So these things are ridiculous. They need each other. But yeah, I'm super excited. If anyone wants to stay in touch with what we're doing, I'm at Voltoro. That's Volt as in gold, Volt, and Oro, which is Spanish for gold, Voltoro. And yeah, stay in touch.
Awesome. Patrick, your final thoughts, please.
Yeah, I just think that these are the most exciting times for Bitcoin since I've kind of been involved in Bitcoin. I think being done with this whole scaling debate, which to me was never really necessarily a debate, but being done with that whole sideshow, having, we're seeing SegWit at 41%, seeing the Lightning Network just absolutely exploding, new applications. This is really like a new golden era for Bitcoin, in my opinion. And we might, the market might trade sideways for the next year. It's hard to say. Anyone who was around in 2014 to 2016 knows that that sideways market did last for a while. But I would say that the bullish indicators now are much, much greater than they were at that time. So I'm just very happy with everything. It's great to see everybody really embracing Lightning, and I'm sure everyone's starting to think about ways in which they want to implement it in their own life, whether they want to be, start opening their own channels, run their own node, which is huge, or just whether they want to start accepting at their shop. So
yeah, absolutely.
Yep.
We did a show on BTC Pay Server because you mentioned accepting Lightning at the shop, and we think that's we did a whole show on the open source project BTC Pay Server, and we recommend that to everybody who wants to start integrating Lightning into their business or just Bitcoin into the business, because it can do both, right? It can do all that stuff. So really good to remind me of that. That's a good point, Patrick. Very, very cool. Where can we find out more about you, Patrick?
Yeah, just find me on Twitter at PatMillerTime.
Awesome. All right, Thomas, your final thoughts, please.
All right, definitely want to remind everyone to like the show, to subscribe down below, and YouTube has a feature you can click the little bell and it will notify you when we do a show. So be sure to click the bell. And also, while you're doing that, if you'd like to go to bitcoinlasvegas.org, we're starting a new Bitcoin meetup in Las Vegas. We want to spread the word not only to the people of Las Vegas, but to the 40 million tourists that come through here every year. It's a pretty simple plan. If we give them a flyer, get them to put 20 bucks in a Bitcoin ATM, they go home, tell the story to their friend, they tell their friend, and they tell their friend. It's about getting normal people to try Bitcoin. And I think the best way to understand Bitcoin is to try it in person. To put 20 bucks on the machine, give 20 bucks to your friend, get a wallet on your phone, send that around. It doesn't have to be a lot of money, just to try it out, see how it works. And I'm excited to show people that, and to get back to playing Mega Man 2, which I'm not broadcasting on Twitch yet, but I am going to have to broadcast in the future. I'm pretty good at it. My brother has this theory: if people sit in the room and make fun of us while we play video games, that could be a show. So we're looking into that and some other options here.
Is it the Mike Tyson ATM?
We could. There used to be one at the link. It had his face tattoo on the Lamassu. I doubt it's there anymore, but they are making $100 million event at the link where they're going to have digital currency. It's going to be like a Chinese market, and they're going to take Bitcoin. So I think there's a lot of Bitcoin interest in Las Vegas in actually using it, having an ATM at the casinos, taking your winnings home, not having to carry a lot of money. You just carry a paper wallet or get it on your phone. And I think they understand it here. A lot of other places, San Francisco wants to program it, but they don't necessarily want to use it. I think people here actually want to use it. And then if we can show it to the tourists, they could take it home to their friends. A lot of us don't have a friend to tell us about Bitcoin, and we need that friend, and we need to be that friend to other people. So.
Yeah, meetups are so important for your local city. I highly recommend everybody start doing them if you haven't. I know a lot of people in the community who have started one. There's Rick. He starts one over there from escaping me. The Block podcast over there in Denver. Block Digest. There we go. Rick from Block Digest over there. He hosts his meetup, and Thomas has hosted several meetups in San Francisco. And so I just want to echo that point that you guys look. The local meetups is super, super important to educate people on Bitcoin, because if you go to event meetup or meetup.com, and just post a new Bitcoin meetup, you'll see people will come, because this is still hot. People still want to know about Bitcoin and blockchain, and the price is down, but there's still a whole lot of interest. Because we know the innovation is exploding right now in the space. So please, if you can, do a local meetup and educate people. I'm sure they'll be appreciative of it.
A lot of people might not think that you're an expert about Bitcoin, but if you know how to use a wallet, if you know how to use Coinbase and maybe Bittrex, and you could buy some Litecoin, you're kind of an expert about Bitcoin. You have a lot of knowledge. You can share just basic knowledge with people, saying that, hey, you don't have to be a computer scientist. You put an app on your phone, you learn what a QR code is, you scan it like a barcode, you send $5 around, you give it a try. I think that people should get their feet wet and just jump right in, put $5 in, send $1, then tell people 10 years later that the $1 you sent is worth $10,000 or whatever. It's fun.
Except don't send it to some prick on Twitter pretending to be me or Vortex.
Yeah, don't do any giveaways. No giveaways. They've altered the giveaways. It used to just be 1,000 ETH, but I just saw a new one where it was 1,000 Bitcoin. So that sounded much more like something that I'd be giving away.
Oh God! Yeah, guys, beware of the scammers on Twitter. Crypto Twitter right now is being invaded by the scammers, and I've even accidentally got blocked by Joshua or by Vaultoro already.
Yeah. Where do I send the coins, Thomas? Where do I send it? Where's the address?
Oh, the address is on my Twitter on every single one of my posts. It's on my Mega Man post. It's on every single post. Yeah.
Yes, and really, I've actually contacted Twitter about it and said, look, you guys need, we're now living in the era of digital assets, of digital things. We need to have reporting. You know, when you report, you can only report, you know, violence or anything like that, or but you can't report a scam. And I know this is hard because then BCH people will report Bitcoin as scam, and Bitcoiners will report BCH as scam. But you know, Twitter needs to do something because we are living in this new era and it needs to be looked at properly.
Yeah, and I think that Jack is definitely on that. I mean, I got a little faith in Jack. Jack has done some awesome stuff in the past, and he's 100% pro bullish on Bitcoin, and you know, he's even invested into Lightning Labs. So I really have confidence that Jack is going to do something because you know, crypto Twitter is so huge and so vital, and really, in my opinion, is the largest community speaking about crypto on the planet. You know, much even bigger than Reddit. Because and the conversation is pretty high level too. Because again, if you see some kind of, you know, Reddit-like type person, right, that's pretty much just you know, hyperbole and yelling names or whatever, you know, you can just block them or just ignore them. There's just huge, because every single major company, even like yourself, Vaultoro, every single major company there in crypto is on Twitter. So it's a great place to be able to directly communicate and share ideas in real time.
And,
so
it was great just this morning. Ryan Hoover, the product hunt guy, he's in a different space. He's more general.com. He got his own Ethereum scam bots. And so he retweeted a picture of it. So it's starting to spread into other areas. He does a little crypto tweeting sometimes, but he's not really related to this. So it's going to be spreading now to, you know, you got to figure all your pop stars, all your rock stars, your actors, your actresses. Twitter has a real problem here. They can't seem to control this. And they all, one of the key highlights is here, they steal your picture and your username. And that's a simple fix for Twitter. I'm not sure why they're not implementing that. You just can't have the same picture and username, especially if you're, you know, responding to the person. But
yeah. To this day, Twitter separates your main username from your display name. They separate that for some reason. I have no idea why they've done this. They've done this from the beginning. It only breeds scammers. Freaking stop allowing a display name. Only allow the username, for God's sakes. But well, I think we can end it there, guys. We hope we wish Jack the best. We hope that he can get this taken care of, because like you say, Thomas, it's now going to spread because they've saturated the crypto space. So now it will spread across to the general mainstream, and that's where things can really start getting hairy, because again, then regular people are going to get hurt instead of just crypto people, and it's going to be a huge thing, and they're going to all blame Bitcoin, so and Ethereum probably. But all right, guys, thanks so much for the discussion. We really appreciate everybody joining here. Thanks again so much to my guests here and to my panelists. We really appreciate it. We know your guys' time is limited, so we really appreciate the conversation. We hope everybody may have learned something here today. And of course, we try to do the show every Sunday right here on the World Crypto Network, every Sunday at 12 p.m. Pacific. So I guess hopefully you guys will join me next Friday in LA. Again, I'm gonna be doing a presentation called Who Controls Bitcoin, and I think we're gonna have a good time over there, have some drinks and have some food. So if you guys are in the area, please check us out. But until next time, guys, we will be here, of course, on the World Crypto Network talking Bitcoin. But until next time, please, guys, never stop talking Bitcoin. We'll see you guys later.
Thank you.
Bye-bye.